I think that Frontier and Spirit will probably eventually merge, just because, two garbage brands are better as one than two single brands. Listen, the ultra low cost carrier model, it looks great in spreadsheets, but it's brutal in real life. I just happen to think that Frontier and Spirit are garbage.
Social platforms are going to be the new OTAs.
Whoever owns the moment of intent controls the bookings.
Are we going to get a bubble? There are thousands of hotels with hundreds of rooms that still need to be filled.
We're going to be focused on this independent, cool lifestyle and luxury, but I have to market like a bank.
I think that we can give our 2 cents into the stories that are going on.
Will be in your ears and on your screens every Friday morning.
Let's do it.
Let's roll.
This is the gold, bro. This is the gold.
Welcome to This Week in Hospitality, a weekly analysis designed for the people building the next generation of great hospitality brands. Each Friday, we take you beyond the headlines to examine the ideas, the market forces, and the cultural shifts reshaping travel and lodging. This show exists for independent owners, operators, and entrepreneurs who don't have time to sift through noise, but who want to understand what actually matters and how the week's developments will impact the work they're doing on the ground. Our conversations are guided by a team whose experiences span every corner of the industry. We've got Ben Wolf, the visionary behind Onera, one of the most distinctive landscape hotel concepts in the Texas Hill Country, and Awasi, a hotel marketing and growth firm elevating experiential hotels across the states. We've also got Scott Eddy, one of the most respected voices in global hospitality storytelling, trusted by luxury hotel brands and tourism boards around the world to shape how they connect with today's traveler. And we've also got Edwin Kramer, a leader who has run some of the world's most admired luxury hotels as general manager at brands like Four Seasons, Edition, and Nobu Hotels. Edwin brings an operator's precision and a global lens to every conversation. And I'm Zach Boozy-Cruz, head of growth at Journey, a loyalty platform for the world's top independently owned and operated hospitality brands, and host of Behind the Stays, where I've spent years interviewing the founders and creators building remarkable hospitality brands. Together, we break down the news, identify the real opportunities, and help you think more clearly about the future you're building towards. All right, friends, without further ado, get ready to dive into This Week in Hospitality. Alrighty, folks, welcome to another episode of This Week in Hospitality. Gentlemen, it is great to be back with you again. Yes, Scott, I know. I'm pink. I'm pink again. Hopefully this is the last week. So, for those of you who haven't heard, and I've been talking about it ad nauseum, so hopefully everyone has heard by now, I'm building a studio, a proper studio in my basement. The contractors told me for the past 2 weeks that it would be the next day or 2 days from now, 3 days from now, etc. So hopefully this time next week, we have a whole new look, a whole new sound. I wonder what color I'll be. I guess we'll have to keep it guessing, right? Will it be pink? Will it be blue? Should I do a little like neon, a little rainbow effect? Who knows?
Right. You can get some chromotherapy during the pod.
There we go. Now we're talking. All right, folks. Well, I want to do a quick update, guys. It's been a couple weeks. Well, for you, Edwin, anyway, since we've seen you. How are you feeling, by the way, man? How's the
good? Much better, thank you. I just lost my voice, and that's very, very difficult to do on a podcast, right?
It is.
So,
it is.
But I feel good. Thank you very much. Thanks for fitting all in last week.
It was just tons of American bias. We really missed our European correspondent. And it looks like our views in Europe suffered last week, man. So a few hundred views less than normal on YouTube, and that must have been your fans. They're like, Edwin's gone. We're not tuning in this week.
I refuse.
Scott, man, what's going on with you? Give us the couple-minute update since we spoke last week.
Been in Mexico for the last few weeks. Was in Nueva Vallarta for the opening of a new Cirque du Soleil show for one of my clients' hotels, and now I'm in Tulum. And I know, Ben, you have a client here, and it is December 17th when we're filming this. I am walking down the main road in Tulum, and I am the only one walking down the road. It is a ghost town. It is shocking to me. Like, do you hear anything on your side? Like, I mean,
Wow, yeah, that's surprising. I mean, I know what they've told us is season seems to really pick up right around Christmas. So it is kind of like end of December. I don't know why. It seems like it's quite nice there in December. So that's probably when I would go when I was going back. But yeah, it's not quite season yet. We haven't heard of anything where they're like freaking out about bookings. So I'm assuming, calendars looking pretty healthy for true high season. Right. But what I see in Tulum, which is such a shame, is you drive around and there's like all these half-built hotels or residences that look like they haven't been touched in years. Yeah. And that's just kind of sad. But the stuff that is there's some remarkable properties, remarkable beauty, remarkable biodiversity right on the beach. I mean, it's a special place, but yeah.
Are these projects, Ben, that just got started and then they lost funding halfway through, or like
that's what it looks like. It looks like a lot of these lost funding. I mean, it looks like that they started building just unbelievable properties, and then the money just dried up.
Yeah, I mean, it wouldn't surprise me. I don't know all the ins and outs of it, or like I don't really know these developers. We know Azulik that's always been quite successful, so I don't know the ones that have kind of gone bust. But I wouldn't be surprised if it was like COVID, right? People really wanting like outdoor. Tulum's kind of a good place for outdoor social distancing and whatnot, and things just went through the roof. And they started pouring more money in, and then things stabilized. More supply came in. I mean, that would be my guess, but. Yeah.
And some Tulum fatigue, I'm sure, too. I heard rates dropped a lot, too.
Yeah, I was going to ask about that because I feel like, I mean, anecdotally, like 5 years ago, and then like maybe right before, and then like even, once people started traveling a little bit more in 2020, everyone was talking about Tulum. And then I feel like for the last like 2 years, I haven't heard anyone talk about it.
People are like hating on it, or people are hating on it, right?
It is very, very expensive. Everything is expensive. Like, it's just ridiculous. You come to Tulum, it's like the prices are through the roof. And then you go right outside of Tulum and it's like normal Mexico.
Dirt cheap. Yeah. Just outside. Yeah.
It's crazy.
Sounds like there's some opportunity right outside Tulum then. Which we can talk about a little bit later. Ben, what about you, dude? Anything new? Any updates you want to share with us?
Yeah, so going to Miami with the family. So we leave on Saturday for 6 days, staying at a buddy's place. So we'll have nice 4-bedroom accommodations in Coconut Grove with a car. And it'll be great. So very, very easy. They have 2 young kids as well. And my 4-year-old, for about a year now, since I started going to Miami a lot, has been asking about going to Miami. So we're going to finally make it happen. And I'm going to show him the Bahia property, the tropical farm hotel that we're building out there, just 45 minutes from Miami. We'll go check that out.
Where is that exactly, Ben?
Redland. You know the Redlands?
Oh, it's in Redlands.
Yeah.
Oh, okay.
Yeah. So like Homestead Redlands, that whole like, agriculture hub, really, right? Mm-hmm. I mean, I was shocked to find out when I learned more about the area, how like that area will source tropical plants for like the Bahamas hotels. And stuff like that, which is interesting. But yeah, we'll be out there.
Very cool.
Casey's going to be walking around and saying, "Dad, why is everyone pronouncing it wrong?"
Yeah, exactly.
That's awesome, man. Well, gents, we have a full docket of stories this week, and I was spending some time kind of rereading some of these articles this morning, and I think that there's maybe like a common through line that I'll attempt to thread between these stories, whether it be some of the things we were talking about last week and really the last couple weeks around what is consumers' appetite for a lower quality hospitality product. We spent a lot of time talking about that from a hotel perspective. One of the stories we'll talk about today focuses on ultra low cost airlines and the whether or not this product is viable in the future. Actually, this morning too, I saw a news story. I don't know if you guys have seen it yet, Scott, Ben, and Edwin, that talks have resumed between Spirit and Frontier about a prospective merger. So there does seem to be this challenge, which we'll dive into in a second. And then also the Fed here in the States obviously lowered interest rates again, and we'll see what that might uncover with respect to possible doubling down of investment in 2026 and beyond. And Ben, definitely want your takes on that. But for our first story, it broke this week. There's been a major leadership shakeup at Frontier Airlines. Barry Biffle has abruptly stepped down as CEO after an 11-year run leading the ultra-low-cost carrier. The departure comes without a named successor, and the board is actively searching for new leadership. This marks the end of a long era for a brand that has aggressively expanded its footprint and reshaped the U.S. low-fare market over the last decade. While Biffle's exit, according to this Skift article, isn't tied to a public scandal, it does come at a time when Frontier, like many airlines, are navigating difficulties, whether it be fuel volatility, margin pressure, and I would argue even just like a broader competitive landscape that's been quite disruptive as the main carriers, United, American, et cetera, have really kind of perfected their low-cost product, their basic economy equivalent product. Scott, I wanted to go to you first here from a consumer perspective. You shit on Ryanair a couple weeks ago and their product, right? Maybe they're the Frontier equivalent. Give us your thoughts on this story, the development of this change. Is this a signal of something wider in terms of the category not resonating with consumers, or do you think this is something else that has nothing to do with consumer trend or shift in consumer behavior?
I think it has nothing to do with human behavior at all. I think that Frontier and Spirit will probably eventually merge, just because two garbage brands are better as one than two single brands. Listen, the ultra low-cost carrier model, it looks great in spreadsheets, but it's brutal in real life. I just happen to think that Frontier and Spirit are garbage. Consumers definitely want affordable, but now the big carriers are able to give you a decently priced product. So now, what's the benefit of flying with these Frontier? I just don't get it at all. Consumers don't want friction. And Frontier didn't lose relevance because people don't want cheap flights. They lost relevance because the experience feels like adversarial, like every step feels like a gotcha. That erodes trust, and once trust is gone, the loyalty disappears. Leadership changes like this, they don't happen just because you've one bad quarter. They happen when boards realize that the problem is structural. And I think that's what's going on here.
Yeah, Ben, what are your thoughts here? From my perspective too, I wonder, does the ultra low cost carrier sort of strategy work in the States like it does in many places in Europe? I think like Europe, Edwin, you can speak to this more than any of us can, but there are loads of ultra low cost carriers. We've got like a couple here in the States, right? And I'm just curious, Ben, what are your thoughts from a macroeconomics perspective here? Like, does this model work? Do you think this is just a shift in sort of consumer brand perspective and or consumer decision making? These brands, as Scott outlined, do, I think, generally speaking, have pretty negative connotations. Maybe, certainly Spirit, Frontier, maybe a little bit less so, especially if you're from like the Mountain West, where they're HQ'd. But what are your thoughts on this story? Anything other than just structural leadership change? Is there a broader trend that you think might be underway here?
Yeah, look, I do think that consumers care about pricing. The basic economy product, gets those rates a lot closer to these budget carriers. So the big value prop of like a flight ticket that's half the price or a third of the price or something like that just isn't the reality anymore. And I know for myself, pretty much everybody that I know avoids these carriers like the plague, unless it's the only route that gets you a direct.
Correct.
And
Correct.
then people will kind of take a flyer. Yeah. Do I take a direct with, and then you're kind of debating, is it worth it to risk, Frontier or Spirit screwing with me? And my dad hates inconvenience and is, a Delta, I don't know, platinum member or whatever. And he has status and always flies Delta, but he'll take a flyer to get a direct flight. And then inevitably, on the second or third time gets burned and is like, that was dumb. Probably shouldn't have done that. But yeah, I also think that it's different than the conversation we were having last week about hotels. For me, airlines and flights are more of a commodity than hotels and stays. Personally, sure. That's my opinion. Yeah. And so the price does the price just on its own does matter more. And even. I don't know. Everybody raves about Delta. Like I said, my dad's a Delta loyalist. I've had more delays on Delta than any other carrier, and I fly them about 10% of the time. So I don't know if that's because just I don't have status and they don't that care about people that don't have status. But I've had better experiences with American. So to me, they're all just like commodity. It's the same. And so that's going to create an environment which the airline business is hard, right? I mean, they're always under pressure. It's hard to make money in that business. And yeah, I think I'm with Scott that I think ultimately there's not a whole lot of brand value of these two groups separately. So I don't know why they wouldn't just merge at some point. Like inevitably, it seems like airlines experience consolidation because it is a commodity product. And a hard business. So the more scale you have, I think the easier it is to operate. So I think at some point they probably will end up merging.
I'm sorry. I also think that they'll merge just because, I mean, the only reason airlines buy each other anyway are for the routes. It's for nothing else. So I think that the routes matter to these two airlines. I will say one other point, that I do think that two discount airlines do things somewhat right, not all right. And coincidentally, neither one of them are in the US. I lived in Spain for 4 years, and Edwin probably has some comments about this, but I flew Vueling quite a lot. While they're not a perfect airline, they are miles ahead of the discount carriers here. I mean, I was flying to Paris for 30 euros round trip, and it was a delightful experience. Like, I had flight attendants on there that actually smiled at me. And, you know, like, unfortunately, in the US, you get what you pay for all the time, whereas other products outside of the US, you can still have a pleasant experience paying for the ultra low cost carrier. I mean, not on Ryanair, but like other companies. And also AirAsia is excellent. Tony Fernandez out of Malaysia. I mean, AirAsia, I flew all the time when I lived in Asia for 13 years, and that is a fantastic product.
Edwin, what do you think the Europeans have got right? Is it just that expectations from a consumer perspective are not the same as they are in the States? Are these airlines just fundamentally and objectively better? What do you think might be going on here in terms of why people do love? Because likewise, Scott, whenever I am in Europe, I'll take a quick flight, and I have actually flown Ryanair. I have had bad experiences on Ryanair. I've also had okay experiences on Ryanair, right? Much better experiences on Ryanair than I have on Spirit. What do you think's at play here, Edwin?
Look, I don't know these U.S. airlines, but I flew in on Vueling this morning. I use them almost weekly. I like them. I think what's happening in Europe here, that the lines, and maybe the same thing is happening in the U.S., the lines are starting to get blurred. You know, when countries had their airlines and they're heavy subsidized, you had great staff, you got a seat, there was a sandwich, you had a drink, and then these low cost airlines came in. There was a real distinction, and you could choose whether you wanted no frills, cheap airlines, or the whole package. And then all of a sudden, these cheap airlines worked, big success story. And I don't necessarily agree with Scott. I do like flying on Ryanair sometimes, because I think what they do for what you get, they do quite well. But I agree with you. It depends on location. I see just the carriers of the Dutch and the French and the Italians. All of a sudden, all these national airlines started to bring out low-cost airlines, right? So Vueling is part of a bigger airline. KLM has one, and all of a sudden, you get the choice in these cheaper airlines of these national airlines, which kind of offer the same thing as these low-cost aircraft carriers, right? So there's no distinction anymore. So now it's not just the cheap airline here in Europe versus a KLM or Air France or Italia. They all have their low-cost airlines too. And I think there's a huge market for people like me who often weekly need to take a flight where I hardly need to take anything because I'm traveling between two places and it's a toothbrush and a little more, that I get to choose a low-cost airline with just a backpack. And that's made it much, much easier for, I think for a lot of people. But the service that you used to get on these proper airlines versus the low cost, I mean, that's not the same anymore either. I mean, I don't get a sandwich, I don't get a drink anymore in these other airlines. So it's like a lot of things in the world, it's bland. It's the Beijification of airlines, perhaps. We no longer up in the air and having a bar and drinking and dancing like we did in the early days. Those times are over. But again, I don't know the airlines in the US. I think the other difference here in Europe is that these low cost airlines, we do trips of half an hour, an hour and a half, and agreeing with what Ben said. It doesn't matter for such a short. I need to get from A to B. I really don't care about the rest. As long as I'm there on time, I get a seat, then I'm okay. I think it's very different if you're using low-cost airlines for 4 or 5 hour flights. Then it just becomes a whole different experience. But I think our distances in Europe are just much shorter for some of these airlines.
Yeah, I've been thinking a lot too about sort of the airlines here in the U.S. that are a little bit more in the middle, right? Like the JetBlues of the world, the Alaska Airlines of the world, the Hawaiian Airlines of the world, right? Like I don't know how often you guys have flown any of these carriers, but I actually quite frankly think that they're the best carriers right now. Now I'm a United loyalist and I have status with United, so I'll always just fly United. But whenever United's not going where I need to go, I'm with Ben too. I think Ben, you were the one that said this, or your dad at least, right? I will always go for direct, even if I have to switch carrier, an airline. But like the JetBlue, I was on a JetBlue flight like a month ago, and it was the best service I've had on any airline.
JetBlue's fantastic.
JetBlue economy might be the best economy out there.
It's insane.
I agree.
It's insane.
Yeah, I agree.
And like they're buying the same fuel, like they're paying the same for their staff, presumably. Like, and there's a level of hospitality that is quite frankly like unmatched. And they were giving, like, I saw this guy order a glass of wine, and he like didn't have his card or whatever. They just gave it to him, and they were like, and then and then after they did that, like, because a couple of people saw, they said, hey, anyone want a free drink? And like they just like handed out and like you do not see that on airlines anymore.
Never.
Let alone JetBlue.
Same with Southwest. I feel like is another one that you didn't mention that kind of falls into that category. I like Southwest a lot. I get, I feel like they have unique routes that are sometimes helpful. I think their cancellation and rebooking policy is super easy and seamless, which I really like. They were kind of leaders in that. And I think they still have the easiest system to do that with, and it's like no penalty. So yeah, I'm with you. I think JetBlue and Southwest, some of these other ones are great for economy.
I think what needs to happen if Frontier cares about who they bring in as their next CEO, I think like there's more room in the middle, right? Like there's more room to break into this maybe not ultra low cost carrier, but low cost carrier, right? And also like what are the levers that you could pull even from a hospitality perspective? I mean, Scott, I saw a reel or a LinkedIn post of yours in the last couple of weeks where basically you were talking about like it doesn't need to cost money to like to deliver great hospitality, right? Like you can people should be able to do this for free, right? And so I do think like there's a competitive advantage for the airline that figures out, right? And quite frankly, Southwest probably does this better than anyone else. I would argue that Southwest likes to be perceived as that middle tier, Ben, but in actuality like is just as expensive as Delta and United in most routes now. They're incredibly intelligent with their pricing strategy, and like it's very difficult to actually figure out how much your ticket costs, quite frankly, until you've paid. And that's obviously incredibly intentional. And they started being more affordable, but I don't think that they actually are today, comparatively. But anyways, point being, like they might be the best in terms of just having personality with their staff, right? You see those viral videos every once in a while of like a flight attendant like rapping, and it's usually like on a Southwest flight, or someone doing something unreasonably like hospitable, usually on a Southwest flight. So I do think there's an opportunity for folks to get a little bit more serious about hospitality on these carriers, and maybe potentially rewriting the brand story a bit to attract that next segment of consumer that might that doesn't have status, but might also be able to pay a little bit more for a slightly better experience.
Yeah, I mean, Southwest has the culture of fun. I mean, it just seems like they're having fun. Either they're doing a great job of faking it, or somehow they make being a flight attendant fun. So good
That's
on
a hiring
them.
thing, right? Yeah. And those jobs will become a lot less sexy nowadays. I mean, being an air stewardess or steward was a real sexy job. You know, you flew and you went to all these great, fantastic locations. You stayed overnight, and that all those things are gone. So, I think that's a pure hiring decision then now from companies.
Well, so it'll be interesting to see how this story develops. I also just wanted to bring this into the fold this week because of the hate that at least I showed, maybe some of us also showed, about about Frontier's a subscription program a couple weeks ago, and we were sort of debating, hey, is this working? Is there anything like the landing page was garbage, and then a week and a half later the CEO's out. So someone was listening to our podcast, guys, and they were like, time to go.
Awesome.
Anyways, our next article, gentlemen, this week, the Federal Reserve announced a rate cut, and there was a story in Hotel Dive that hospitality leaders at the executive level are recalibrating how they view hotel investment for 2026. Industry execs are signaling that lower financing costs could unlock more capital development, greater appetite for development, and a resurgence of investor confidence, particularly in secondary and tertiary markets. The story highlights that while cost of capital has been a headwind for the past 18 to 24 months, I think, Ben, you've seen this, Edwin, you've seen this, et cetera, this cut may ease pressures on debt service and return requirements that in turn could encourage institutional capital back into hospitality, especially for assets that demonstrate differentiated experiences, strong operational fundamentals, and resilient demand patterns. At the same time, execs remain cautious, pointing out that consumer behavior, macro outlook, and return expectations still require disciplined underwriting. Ben, I want to go to you here as our resident developer. Any musings on this story? Are you hearing any chatter? Did the group chat blow up with people excited about this rate cut announcement? What color can you shed on this story?
I mean, they've been coming down. There's not as much, exuberance, I think, but they are coming down, which is amazing. I mean, I think people who are not in the real estate development world underestimate how huge this is for that economic activity. And it's always a delicate balance. I think the Fed actually does a damn good job. They have a really hard job, right, of sort of landing the plane of rates while not having inflation go through the roof. I mean, grocery prices are kind of crazy, but you can't keep rates so high that nobody wants to do business. So it's a challenging balancing act that they have to follow, and I think they're doing a good job. But yeah, this is absolutely huge, and it's not just the first layer impact of when rates come down, cost of capital goes down on a 1 or 2 year plus ground up development project. That's you're paying a fraction of the interest of what you would be maybe a year ago, and that makes projects pencil that otherwise would not pencil. So that's kind of the first order impact. That's the most obvious. The other one is that when attracting equity capital, and let's say it's not institutional, even if it is institutional, but let's say it's like more retail capital, more passion investors, which is what I've brought to the table in a lot of cases, network-based investors, personal brand-based investors, they're comparing a ground-up hotel deal to like mid to high single-digit returns that are basically risk-free. So it's like, why am I going to take a flyer on a 20% IRR, 20% average rate, over the course of the investment versus, 5, 6, maybe even 8, 9%, depending on the deal flow that you get on something that's pretty much risk-free. So I've seen equity be a lot more open and available now than it was a year ago. I mean, a year ago it was almost impossible to get some of these ground-up hotel projects financed. And I learned as a developer over the past 5, 6 years how important timing is, because when I had no track record before I had built anything, was actually one of the easiest times for me to raise money, because it was end of 20 into early 21. Rates were at zero. Everybody's chasing yield. And so I was able, in 2 weeks to raise $1 million, and I had no experience to get the first Onera project equity that we needed. Then cut to a year ago, it was hard for me to stand up any equity. Thankfully, we had projects already being developed and sort of that we were trying to get open and stabilized. So that was fine. I was busy with that. But then now coming into this year, I've seen things open up a little bit more. We were able to raise the equity we needed for Baya. We're going to be starting to build that early next year. And I'm just hearing more and more things are getting funded, which is amazing. And most of the stuff I hear about getting funded are cool, unique, experiential products, because that's what people hit me up about. So it's exciting to see some of this stuff actually get the capital that it needs to bring amazing products to the consumer.
And what about you, man? You are known as the gentleman that helps people buy hotels. You think everyone should buy a hotel. Any musings and
Not
or
everyone.
chatter? Not everyone. Any chatter in your group chats about this? How to again, European market different, but like from an investment perspective, are you seeing kind of the similar increase in appetite for these sorts of projects? Any color you'd want to add to Ben's insights
Sure.
into the story more generally?
Yeah, I want to add the color pink because we already have that. Listen, Fed cuts in the U.S. This might trickle over. This is a global economy, right? So, if this allows people like Ben, people I work with, to open up great properties because there's people who have ideas and people really want to make a difference in hospitality, great. What I'm worried about is that there's a hefty appetite for hospitality investment. The world's richer than it ever has been, and there's massive companies that are growing and growing and growing in terms of investments, right? And then you have the Marriotts and the Hiltons and all the big companies who just want to grow in terms of room size. I'm afraid if it flips the wrong way, what I think would be the wrong way for the world, is where big institutions start owning most of the assets in the world. There are still 50% of the hotels in many parts of the world are still independent. There's a lot of family businesses where the next generation don't necessarily want to be hoteliers anymore. These buildings are up for sale. This was happening in Italy. It's what's happening in Spain at the moment. The next generation doesn't really want to get in there. If big capital buys up all buildings and do renovations that are bland, and we just have a lot more of the same, and everybody's value adding, and these buildings in the future become unaffordable for individual investors, right? Because that's at some point the prices of assets are not going to drop. I mean, I don't think that's a foreseeable future. I just hope that there's still space for those people with wonderful ideas, and the ones who might take a little longer for a deal to get done, a little longer to raise capital instead of the big boys and big girls who can quickly make deals. I hope there's still room for them to grow and to do a first, second, third property, just like Ben's doing.
Do you think, Ben, that I'm curious about the type of investor right now that is excited about these sorts of projects, right? So, Edwin, not the institutional investor, but Ben, the networked, if you will, investor, people that I think, quite frankly, like us, that get excited, right, about these projects, that prefer independent hotels, that like these really cool, unique experiences, and want to, empower other people to build these experiences, want to empower people to run and own these assets. To put my question a little bit more succinctly, is there sort of a new kind of investor that you think is like the best sort of investor at this exact moment, who has enough capital to help fund these initiatives, but isn't institutional yet, and still has, for lack of a better term, like a soul? Like who should be investing in these sorts of projects? If it's not, as Edwin put it, the big guys, the big institutional capital.
Yeah, look, I mean, the problem with the big guys in many cases is that I don't think they understand the product. They can say experiential all day, but they don't actually understand what it means to create a property with soul, that has a vibe, that has an aesthetic. They're not willing to make the investments required to make something super cool. It just looks too rough on the development budget. So, and there's exceptions to that, but by and large, I think that's the case. One of our investors and actually partners in Baya, Brian Lubin, he runs this mastermind that helps people get out of their 9-to-5 and become investors, typically in small businesses, but he's kind of pivoting a little bit into real estate and specifically hospitality as well. And he has, I don't know if it's a book or a line or what, but he has this thing called the passionate investor instead of the passive investor. And I feel like that is really what I'm attracting and what we are attracting with these projects. people that are super excited about what we're doing. They want to be a guest. They want to be a member. They want to be a part of it. It's cool. They want to come for friends and family, soft opening. They're rooting you on instead of trying to tear you down. Right. And that's the kind of investor that we're looking for. I mean, it's such a pleasure to work with these guys and gals that are passionate about experiential hospitality or farm hospitality or wellness or all three, which is kind of where bias sits at the intersection of. And they're excited to also have the opportunity to get into a hotel deal too, I think, right? Because as Edwin was sort of alluding to, I think a lot of folks think that that's reserved for maybe institutional capital or super high net worth. And I don't know, for me, a 20 unit boutique property that makes, it partially pencils because we have a unique land lease structure. We're not buying the land, the dirt for this exotic fruit farm where it is going to be like $6 million. So because we're able to land lease, have a deal with the farmer landowner that they can get a percentage of revenue. So it's kind of like a win-win for both of us. And then I have to stand up a few $1 million. I don't mind having 15, 20 individual kind of smaller investors when they're all, passionate about the product and they get it and they want, to be a part of the experience and they're almost part of your word of mouth marketing engine. So that's what we're trying to do. And trying to creatively finance these properties. There's a number on the debt side. There's a number of mechanisms that allow us to get them off the ground. It could be like a USDA or a CPACE, federally backed or federally funded programs. It could be, private debt. I'm doing a private debt round right now for Onera Wimberley, where effectively it's a different type of investment. It's not, you put your money in and it's a ground up hotel, so you're not getting cash flow for a couple of years at least, if not multiple years. This is, hey, we have an asset that's stabilizing. We need to refinance out of some other mezzanine debt. You want to come in on the private debt side. It's real estate backed. It's much higher yield than you're going to get putting your money in a bank right now. We're at 11%. The bank's maybe at 4%. And that's attractive to them too. So I think that more and more investors are getting interested in this class. And, to the contrary with Edwin, I mean, I'll tell you, being on the ground and talking to a ton of these people, it's easier right now than it was a year ago to get these projects off the ground for a first-time developer or an early developer that's doing something more boutique-y. So I do think we'll get more of that product as rates come down. I don't think that the institutions are just going to gobble everything up. Maybe the trophy assets, the super hyper.
Yeah, I mean, I think we're talking about very different things, right? So what you're the fields you're in. I mean, that's not what the average world does, right? And not, there's a lot of hotels that are not, not attempting to be cool, and there's a lot of people who don't want to be in cool hotels. There's still airport hotels. There's still, business hotels. There's still 300, 400 room hotels with big pools where people just want to sit and be all inclusive. I mean, that's not necessarily going to go away. We're not all looking for experiential travel. So I think that's more what I was talking about. I think there's a huge opportunity for people to do fun things like you're doing in that field. I agree, and that's undecided upon too. But there's so many other buildings that might be gobbled up now by perhaps larger companies, and I see it right here, right? Even a family company I was working with in Italy, five hotels, they got bought up. They kept chairs. The renovation was done. Nobody really agreed on it, and it just looks stale, and it's a shame because that's a family company who was sort of selling out, and they're 200, 300, 400 bedroom hotels, and they do pretty well. It's not fun, it's not cool, but it is happening. That shift is happening.
Yeah, Scott, I want to get your perspective here too. I mean, you fly around the world quite literally, and you go and work with hotel owners, operators to help promote their respective properties, to help tell their stories. When you're talking to your contacts there, whether it be the GM, whether it be the owner, right, of the property at a happy hour after a long day of shooting content, and they're telling you about their dreams and their goals and where they're trying to go, what do you hear? What is the happy hour conversation around, from an international perspective in particular, around kind of the state of what we're talking about here? Are people wanting to expand their brands? Do they feel like they can? Do they want to go buy new properties? Do they want to do ground up builds? Are they trying to just do everything they can to not have to sell to the big guys? What is the ground truth that you're hearing with respect to just growth in the industry right now?
Yeah, so, everyone cheers when rates come down, but smart operators, they pause because rate cuts don't fix bad fundamentals. They expose them. You know, cheap money doesn't save weak brands. It just delays reality. You know, capital will move again, but it won't move blindly. You know, investors are underwriting story, demand, digital visibility, brand strength more than ever before. And if your hotel doesn't show up online in a meaningful way, which is what Ben does really good, it looks risky no matter what your numbers say. You know, too many owners think financing conditions will solve operational problems, but they won't. If your marketing is tired, your positioning is unclear, your guest experience is inconsistent, lower rates simply give you more time to keep making the same mistakes. You know, having said that, as far as expansion and money is concerned, in the Middle East and Asia right now, I mean, they are expanding the numbers are just ridiculous. I mean, if they find an empty island, it's going to have a hotel very soon. It's, you know, and having said that, I just got off a call this morning. I might be heading back to Southeast Asia in 3-4 days.
Wow.
So,
Wow.
Yeah.
And
Not on a low-cost airline, though.
Not on a low-cost airline.
No. United, baby.
Yeah. Yeah, no, it's really interesting. I think it's a dynamic moment. I do think from, you know, what I hear from friends too, especially folks who are building that more boutique product, whether it be kind of a 10 key product to upwards of 50 key products, they're trying to find sort of that right investor class, if you will, that wants to invest not even necessarily in ultra experiential products like the ones that you build, Ben, but just differentiated products. Right? I think of like the Manchester Hotel in Lexington, which I probably have talked about on this podcast because they're one of my favorite examples to bring up. They've got an incredibly strong brand. They're a one-of-one hotel right now. They're interested in like expanding and trying to, you know, figure that out. But you know, they don't want to go and raise a ton of institutional capital. Their goal is to remain independent, but they've got one hotel in like one market right now, right? And so trying to figure out how to expand, you know, to 3 hotels, right, in the next 3 years is a challenge. And they want, you know, to your point, Ben, they want the passionate investor, right, not the passive investor. Yeah. So I do think there's an opportunity for folks right now, and it'll just be interesting to see in 2026 how the big guys invest, and then also how the, you know, the little guys, so to speak, invest. I want to shift, guys, to our social segment of the week. A post, a video, a reel, a TikTok, an X post, anything that we saw that was moving to us, inspiring to us, made us stop in our tracks. Ben, I'm going to start with you here. Any piece of content that spoke to you in the last week?
Yeah, so there was this reel that I saw in the last day or so that it was at the Sheraton Maldives, which is a beautiful property, and I think it did almost 6 million views. And the whole reel is basically showing like behind the scenes of a content creator. And the content creator is going through and doing her video, and then her partner is running around the room, opening doors, shutting blinds, like with his head down, hiding behind stuff. And you know, I think this goes to what Scott talks about a lot too, the behind the scenes, the authentic, candid. You hear her like hysterically laughing while she's filming this video, and you just connect to it. It's like hard not to watch the whole thing, right? So
it's real.
I just thought it was a great piece of content, and I immediately hit up my team. I know we've talked about doing behind the scenes stuff, and we've done a little bit, but I was like, hey, are we doing this? We need to do this. So it's something cool there for sure.
I'll actually go second because I have a very similar reel that I watched this week that got my attention. It was from a reporter at the Points Guy. It was like they did a collab with the Points Guy, and he like the hook was like, this is what 1 million Bonvoy points gets you, which is just such a cool, like, you know, hook, because you're like, oh yeah, like what does 1 million, you know, Bonvoy points get me? And he is like running through. I honestly, I don't even know where it was. It was some like Caribbean like resort. So they didn't do an effective job about telling me like what the property was or even like where it was. But he's running around this like ridiculous suite, right? Oceanfront. There's outdoor showers. He's, you know, jumping on the bed. He like, you know, jumps off the bed. He goes into like the shower in the actual primary bathroom, then the outdoor shower. runs around, dives into his like private pool, jumps out of the pool, then runs, across his like private beach, and then jumps in the water. And it's just like, it's so fast. It's just beautiful. And in a nutshell, like it literally shows you, hey, if you were to spend 1 million points at a suite in wherever the hell this place was, this is the experience that you would have. Super authentic. No like, a day in my life at, X resort, not polished at all, well produced, right? But just super freaking fun and fast. So anyways, that was the best thing on social I saw this week. Edwin, how about you, man?
Yeah, mine is more of a message. This one made me think, in terms of where we think, and we talk about, check-in, check-outs, queues, but also that personalized experience at a front desk. And this was one that shook me up a bit, as in, where are we going to go? Dubai, I don't know if you saw the message, but Dubai just approved a citywide digital hotel check-in, and it's going to make that mandatory for their 825 plus hotels. So to cut down on queues, right? It's a government verified identity, and they're trying to connect identity and travel and security and tourism into one sort of seamless ecosystem. But it got me thinking of, once they own all that data, what are they going to do with it? So you dig down a little bit, because this was a short post, and I think it just came out. So people are starting to think what that really means. But they're going to be able to use this with AI, because everything's going to be all the data is going to be uploaded and used to predict visitor flows and look at dynamic hotel staffing, and really use this also, and use history and data of guests for guest focused initiatives. So I thought it was one to think about. If a government of a country can actually make this mandatory. Are they the first? Is this going to follow? Because the rest of the world is really, lagging behind, and in the EU we don't even have a digital ID standard, because we're such a fragmented collection of countries. And I read in the US it's only 30-35% is partial digital check-in. So let's see where this goes.
It makes me think about airports. I feel like just like overnight. I don't know if you guys, definitely US airports, but you just like walk in and the camera's just there, and you have to like opt out, right? Like if you like, when you're going and flying, right? Like you don't even need to show your ID anymore. You just stand in front of the camera, and I feel like overnight, like those just like popped up, and the fact that like it's like you have to be awkward as a traveler, and you have to like tell the TSA agent, no, I don't want my picture taken, right? And then it raises like a weird flag, like, well, why don't you want your
Why
thing?
not?
And they look at your
hiding
ID,
something.
they actually, they check your ID front and back, and you're just like,
Yeah.
I mean, it's an incredible tactic. It's manipulative, I would argue, but like whatever, like, and so you just pose, let them take the photo.
Sure.
But I do think, like, I don't know, from an ID verification perspective, right? Yeah, being able to like pop in a clear box or whatever vendor they use at the hotel, so you don't have to wait in line for verification would be great. But the problem with that too, as you well know, Edwin, is like the check-in experience should be so much more than verification, right?
Yes.
Now, as a traveler, as a consumer, I know I'd like the ability to just like verify and then be able to go quickly to my room if that's what I chose.
Depending
to do.
on the occasion, often, right? Yep.
Yep. But right, the most magical experiences I've had at hotels like typically start with a great check-in experience.
Absolutely.
So I think from a value prop perspective, that'll be interesting to watch for sure.
Yeah.
Scott, what about you, man?
So a friend of mine sent me and then translated this post. This was done on a Chinese social network, and it got 65 million views. And it was a hotel post. It was a shaky video. You could tell it was done with a phone. And it was a video of a housekeeper finishing a room at the end of a long shift. No music, no cinematic edit, just natural sound. And at the end, the housekeeper looked at the camera and said something simple like, this room is ready for whoever needs it tonight. And then it said, this is who makes your stay possible. And that was the ad. And it was 65 million views. Like, it was unbelievable how there was 20,000 comments. There was, I mean, it was fantastic and the video took 10 seconds. Like, it was unbelievable. It's, what makes this post powerful is what it doesn't do. It doesn't sell. It doesn't brag. It doesn't try to be clever. It doesn't have a fancy edit. It doesn't, do all the things that most of us try to do. And this is what brands need to realize. It's not always the fancy stuff. It's the real stuff.
That's beautiful. And I mean, it goes to what Ben and I think Andy were talking about a couple of weeks ago. This idea, right, of like, hey, how do you put staff right in front of your audience more? And I do think there's just this growing awareness. I think your average consumer, right, who pays any sort of meaningful attention to the news or the state of the economy, understands that like hospitality in particular has been like disrupted in terms of a staffing perspective since the pandemic, and it's been harder than ever to hire the right people, to retain the right people, et cetera. And just being able to like, I have found myself, and maybe I live in a bubble, which depending on who you talk to, I certainly do. I have found a pink bubble. I have found myself to be much more just like aware of the people that are helping in any context, right? But especially in hotels, and like going out of my way to like say thank you, and like genuinely meaning that. And so I also wonder, this is a long way of saying I also just wonder if there's a broader consumer sort of awareness on like the importance of like, hey, this magical experience, especially for experiential travel, more luxury travel, is, you're yielding this experience, you're getting to benefit from the fruits of the experience because of the labor that someone and the love that someone invested into it. So I do think content like that is particularly timely in this moment.
Yeah.
All right, guys, last story of the week here, which kind of ties into what we were talking about in story number 2 with Fed interest rate cuts. But we're going to go to our European correspondent, Edwin Kramer, here for this one. But there's a notable trend emerging in international travel. This came from Hospitality Net this week. Europeans are increasingly choosing smaller U.S. cities over the classic gateway destinations like New York or LA. Folks are opting to travel to markets like Nashville, Austin, Charleston, and others. And these secondary and tertiary markets are outpacing the traditional blue chip cities in terms of search interest and booking intent from European travelers. The story suggests that the shift is fueled by a combination of factors, from a desire for more authentic, localized experiences to lower price points and better access. Quite frankly, probably also because more of these markets have added direct flights to core European hubs. European travelers are looking for American cities with strong cultural identity, Hospitality Net argues, music scenes, culinary depth, and walkable neighborhoods like they might find at home. Edwin, is this trend something that you are observing amongst your peers, amongst your community? What would you say about this article? Is it a bunch of fluff? Is it 51% versus 50%? Like what's happening here?
I completely agree. First time I ever went to New York in the 90s, and only Scott's going to understand this. No internet. You walk around town. It's the first time you're there, but you recognize things. You think, oh, I've seen this before, because of the movies, right? That's how we grew up in Europe. Nowadays, I've checked into every city. I've driven on every airport. I've checked into great hotels. I've been to the Maldives, and I've never been there. But because of social media, because of reels, because of posts, the feeling of being somewhere, I've already perceived some of this. So I think people are wanting to go to places where they haven't seen things from yet, where things that are not necessarily that well known yet. People craving for something new for themselves, but I think also from a status perspective. I was reading an article. Somebody said, I went to Antarctica because in the middle of the winter. I mean, who really wants to do that? But it's new, right? It's discovering new places. I think that's definitely a primary reason. I think the other bit is some of these big cities just become so unaffordable. And we were having discussions on a couple of sessions about price points, right? But if you look at many European average salaries, they're about half what the U.S. has. In Southern Europe, 30,000, 35,000 euros is sort of the average salary. That in dollars it's just a bit more. In Northern Europe, that's slightly more. That's about half. So at some point, if and your breakfast and your coffee and your lunch and your taxi and your dinner and your drinks and your show are all double the price, you can't. And I think the big cities and the same thing's happening here in Europe. London and Paris, massively expensive. You do it because you want to go back, right? And there's reasons for you to go, but people are also wanting to discover other cities, and they're getting better money for better value for, I think, for their income. So I think it's definitely definitely two way. But it's the same thing here. Barcelona and where I live. People will still always go to New York. People still always go to Barcelona, but people are now going to Valencia. They're going to Zaragoza. They're going to Marbella. They're Malaga. They're trying out new cities. People are craving for more. And I think thirdly, we travel so much more that it's not just that one trip anymore. Yeah. Right. So we've been twice. We've been 3 times, and we're all getting. The world's getting richer. We have more money, more disposable income. So we're not going to go back to the same place. We want to travel more, and they were never on our radar when we had one trip a year, right? We do many more trips a year now, so I think it just opened up a lot more possibilities for people to travel.
Well, and to your point, I think with the rise of social, just being able to see these towns, discover places that, quite frankly, like you just literally didn't know existed. I mean, my wife and I got married in Italy, and the place that we got married at was a place we discovered on Instagram in like this small town outside of Assisi, right? Which everyone I've talked to, like no one's ever heard of this place, right? And literally the only reason we heard of it was because we saw someone post about their wedding on Instagram, right? When we were looking for Italian weddings on Instagram. And so to your point, right? Like maybe a lot of this is just, the cumulative effect of more content that focuses on telling the stories of more places that are not New York, LA, et cetera. Scott, what about you, man? I want to get your take here. Is this surprising to you when you're in Asia? I know we were talking about Europe. Are we seeing similar trends from Asia travel? Are folks wanting to go to places other than New York, LA, et cetera?
100%. And I think it is 80% because of social media.
Yeah.
The world is a big place, but the world has always been a big place. But you didn't know until you started seeing it around on social media. And I also think these smaller destinations are taking advantage of it. I think they're coming up with very unique campaigns to drive people away from these big destinations. Yes, New York is always going to have that. Barcelona is always going to have it. London's always going to have it. But right outside of New York, New Jersey's doing a great job. Connecticut's doing a great job. All these other places that are surrounding, just like Barcelona, just like London. You're seeing, who would have ever thought to go sleep in a farm in the middle of the UK? You'd think London. No. But when you see a cool story being told or a cool drone video of these places, it makes it easy. And to top it off, you get better value.
Ben, the Texas Hill Country is notoriously known as like a drive-to destination. I think you've quoted this, I believe, or others, friends of ours who know the Hill Country will have said something similar about, like, I think the number is like 80% of travelers to the Hill Country are from Texas. Again, correct me if I'm wrong here. Do you think, are you guys seeing any sort of increase in European travelers interested in the Hill Country, or even out of state travelers? What are your thoughts on this trend more broadly? What opportunity do you think exists here for hotel developers, hoteliers? How do you think about this story?
Yeah, I think it might even be higher than 80%.
Okay.
Hopefully we do attract more international. I do think Austin is getting a lot more international travelers, which is
on the list.
Cool.
Yeah.
And then, they may pop out from Austin to check out the Hill Country, maybe not on the first trip, but the second trip. There's plenty to do in Austin proper. I think Scott's onto something here. And to me, social media has created this way that you can get a small window into some of these other places that before social media, you were relying on the movies, the books, the massive tourism campaigns of the ads from those big cities, right? I love New York, or whatever it was, right? That's what how you were learning about places. Now, if you can see, oh, Nashville looks cool. Oh, I really like Austin's vibe. Maybe I'll go there. and you get to have a unique experience. You get a unique story when you come back. Probably maybe nobody in your friend group has been to Austin or Nashville. So there's like a novelty to that as well. And it's like some of the, hip up and coming cities in the US. And I think some of that is like, as we've talked about, not just for tourists, but for residents. These cities are so expensive. It's so hard for the young, hip, cool, cultural, for them to be cultural epicenters when nobody who's young, hip, and cool can afford to live there. Yeah. So you get a lot of those people moving to Austin and Nashville, and then Charleston. I love Charleston as well. My grandparents were early adopters there. They moved down there like 30 plus years ago. So I've been going to Charleston since I was 8, and I've seen it transform. So I think it's all those things kind of melded together that this makes a ton of sense, and I love seeing it and hearing it. And I hope international travelers continue, and European travelers specifically, continue to check out, Austin and Nashville and Charleston, these lesser known destinations, branch out to the hill country, the low country, the Outer Banks, places like around some of these cities as well. So I love it.
There was a related story that was talking about how the vast number of people like leaving California. Obviously, this was a big trend that everyone was talking about a couple of years ago, and how that like made it overseas. And this idea that, if all these like celebrities are moving to Austin, if all these entrepreneurs are moving to Austin, if everyone's choosing, Nashville instead of LA for music, right? There must be something there. And so this one commenter was talking about how like perhaps it's also just a signal of like how these stories have had a little bit more international attention because of the exodus from California that is driving some of this. Now, again, this is a commenter, a pundit, no real data here yet. But I also do just wonder too, if we'll see people still do New York, still do LA, but for a couple days, a weekend instead of a week, right? And then tack on one of these smaller cities. I think about how I travel internationally too, and that's what I'll do. I'll do 2 days in Rome instead of a week in Rome, which I might have done a few years ago, and then go explore some smaller Italian town. So very interesting to see how this progresses. Especially, I'm always interested in terms of just where international travelers decide to come to the U.S. beyond the major cities, because I think that can also just be a signal of like how great that city is doing at marketing itself in some way, shape, or form. Gentlemen, it is time for the listener's favorite segment of the week, which is Spice of the Week, our opportunity to share a hot take, a strongly held opinion, a data point, or anything else that has been on our mind in the last week. Scott, going to start with you, good sir. What is your Spice of the Week this week?
So I want to describe my experience in the past 2 weeks. Let me put this in perspective. Recently, last week, I stayed at Vedanta in Nueva Vallarta, in a suite that probably cost $4,000 a night. Massive space, every amenity you can imagine, insane pool, service everywhere you turn. By traditional industry standards, this is ultra luxury. Then this week, I come to Olas Tulum. It has 9 rooms. There's no air conditioner. There's no pool. It's the last hotel, and Ben can imagine this, on the main strip before you get to a 2,000 square mile biosphere. And yet, for many people I know, Olas Tulum feels just as much of a luxury as Vedanta. It just depends what kind of traveler you're talking to. I know traders in New York that work on Wall Street that make $1 million a month that would pick Olas Tulum over Vedanta every day of the week because they just want to put their toes in the sand. They don't want Wi-Fi. They don't care about air conditioner. They want to be able to go to the beach and disconnect, and they don't want to be around 1,000 people. Versus, I know other people that want the $4,000 a night room, and they also want a beautiful beach. So it just goes to show you how expansive and how huge this industry is, and how there's something for everybody. One thing that also surprises me that I just found out, and now I'm very good friends with this owner that owns this. He's from Brooklyn, actually. Olas Tulum was the first lead property that had platinum certification in all of Mexico. You know, the LEED, like, and he was so proud. He's more proud of that than any other certification that he has. I mean, that is crazy. But yeah, it's just really cool, and it's these 2 past weeks have been so drastically different that I've thoroughly enjoyed every day of it.
That's amazing, man. I love it. Edwin, how about you, sir? Spice of the week?
Yeah, spice of the week. So I've been reading a story that the U.S. is making some changes into how to allow foreigners to come into the country, right? So visa changes, increases in prices, an extra $250 per person, 5-year social media history, emails, telephone numbers. Now, I don't want to go into whether that's right or wrong or how people are going to actually measure this or check this at entry points. But for me, that was linked immediately to the World Cup. You know, massive event, one of the biggest football, soccer, as you call it, one of the biggest events in the world. Most tickets already sold. I went online and there's, for some games there's 2% left and a lot of tickets are already sold. If this is a new measure and it's going to add, complications, denials, perhaps, entry denials and or, extra cost onto what's already a costly trip. Football fans are not the most, how do you say this? Forgiving or adaptable. And I just hope this is going to play out right. Because a lot of things can happen, right? And we'll leave it at there. But I just hope it will play out. It's such an important event for the whole world in coming together in sports that I hope the stadiums will be filled and this is not going to cause any disruption.
I'm sure there'll be plenty of fun stories for us to talk about over the next few months here. Awesome, man. I'll go quick. My spice of the week. We're running. I think I told some of you guys we're doing this 12 stays of Christmas giveaway at Journey right now. So we partner with 12 of our partners, giving away 2 free night stays, and it's been really interesting because first week we literally just relied on social ad spend. So we just spent money on ad content, promoting our reels, etc. to drive traffic. Performed really well. Second week we said, okay, let's start partnering with creators and shift spend from traditional ads to creators. Now, partnered with some awesome creators, large followings, in theory, vetted, yada yada yada. It's been wild to see just how lackluster the performance has been from these larger creators thus far. Now, granted, we're 2 days into the switch, so I reserve the right a week from now to totally change my mind. But I was diving into the data a little bit and talking to some other folks and doing my own research, and I mean our cost to acquire a member is 10x, right? What it with a creator as it is on our own traditional social spend. You could unpack that and there's what is the value of someone we're getting from just a random Instagram reel versus someone who's a follower of a vetted account of this kind of individual that we want to attract to Journey, etc. Lots of nuance still to unpack, but I started there's one creator campaign that's crushing it right now for us of all the ones that we've launched, and it's a regional account. So basically it's like a NOLA account, so a New Orleans account, and this guy just goes and literally just he's not a feature of his account really at all. It's just these really cool places in New Orleans, and it's NOLA Travel or something is his account. And it got me thinking, Ben, I know that you've talked about this a lot. I know that you guys have tested this with some of the work that you do of these regional, niche, explore Santa Fe, right, accounts, I think, that you guys have created, and how that one account is driving 10x, right, the new member signups as any of these other creator partnerships that we've launched. And quite frankly, I mean, I don't think any of these people that we've partnered with will be listening to this podcast, so I'll just go ahead and say it. He's 1/10 of the cost of everybody else, right? So again, jury's still out in terms of how valuable these members are and how quickly they'll convert into to True Travelers and book one of our partner properties. But I guess the spice of the week really is, I do wonder if there's going to be the shift from traditional kind of creator influencer spend to these more thematic accounts, right? And Ben, I know that you are kind of on the leading edge here, but quick little data point that from our relatively small fixed campaign over these last 10 days, though that type of account is dramatically crushing these traditional influencer creator accounts.
Yeah. I mean, so as you mentioned, we have a We Love Santa Fe account that we launched a couple months ago, already has close to 13,000 followers. We've had some creator collabs with that account that some have done really well, some have done so-so. And man, I love the market-based account, but like the sad, truthful answer, and I don't think it's sad, I think it's good, but the truth is it's just how good the content is. That's it. That's all that matters. If your video is not getting views and engagement, like it's just not good content, right? People don't care that your skip rate sucks. Like, everyone's opting out within 3 seconds. And that creator of NOLA, it sounds like maybe you got them on the come up, right? Where they know what they're doing. Or they caught a stroke of luck, but if they have repeatable results, they know how to create good content. They know what people want. They know how to hook them. They know how to retain them. And it's one of the most, I think, valuable competencies in the world today is being able to produce and put out good content, because it is hard. It is competitive. Even content creators that have 1 million followers that were great a year or two ago are putting out videos, if they're not staying up to speed with trends and what's working now, that are getting pretty low engagement. So you really have to look at like recent performance when evaluating these folks and determining what to pay.
It's just so tough, man. It's so freaking tough. Like, you guys know this world better than I do, but it's just trying to decide. Like, follower count really matters sometimes, doesn't matter at all. In other cases, engagement really matters sometimes. And it's just trying to find the right people for the right budget for the right kind of content is so tough.
It was much easier when the choice was a quarter, half, or a whole page in a magazine.
Yeah. Oh yeah. Ben, what about you, sir? Send us home with your spice of the week.
Yeah, man. Just seems like people can't get enough of farm hospitality right now. It's having a moment. I know this isn't new for a lot of us that are in hospitality. We know some of the best properties in the world are farm hotels, but I think for like the broader masses, this is kind of like a newer agritourism, farm hospitality. It's hot right now, and I don't think it's slowing down anytime soon, because it hits on so many of the things that people want right now. So it touches on like the wellness component. I want to know where my food comes from. I want to be able to see it. The experiential component. Maybe I want to pick it. Maybe I want to do beekeeping. Maybe I want to milk the water buffalo. Like whatever it is, I want to have that experience. And there's a nostalgia to it as well. With all the tech that we have in the world today, people want to, maybe just for a few days, maybe to live there. Like there's this whole thing with agri-hoods that's popping up, like Serenbe in Georgia, and I think that will grow. But like for a few days, a week, I think almost everybody wants that, right? To have that, what you were talking about, Scott, in Olas, right? Disconnect, reconnect with nature, with yourself. And not be inundated with tech and feel like getting back to a simpler time of life. So it's a $8 billion industry today, which is not big by hospitality standards, but growing at 12% a year. I mean, that means it's going to more than triple in less than 10 years. But the properties that are winning, the farms are central to the experience. It's not like we added an herb garden or a flower garden or something like that, right? Like in a lot of cases, the farm came first, right? And like South Hall, right? It was a charity farm, and it became a hospitality property later. But these places are racking up James Beard Awards and Michelin Keys, like they're just crushing it. And I think it's because it hits on every aspect of what people want today.
And I mean, talking about like a gold mine for storytelling too, because of the history of these places, right?
All day,
right? Yeah, the stat. I mean, it's just you don't have to fabricate anything, right? Because it's just by nature a storied place.
Exactly. Gold mine.
Well, gentlemen, thank you as always for joining me for this wonderful conversation. This is actually a highlight of my week every week, guys, and love your insights. Love the perspectives that you guys bring to the conversation. Love the work that you do. Just a quick programming note for our listeners. We will not have an episode next week for the holidays, but we'll come back the week after for a special episode where we reflect on 2025 and the biggest trends, stories, insights that happened in the year, and then also share our predictions for 2026. What will be the biggest trends in travel, the biggest trends in hospitality, hot takes, strongly held opinions that we might have for the year ahead. So be on the lookout for that post, not this Friday, not next Friday, but the following Friday. Gentlemen, thank you for joining me for This Week in Hospitality.
I'm going to miss you guys next week.
Holidays, everybody.
Have a good holiday.
Happy holidays, bro.
Thanks for joining us this week. If any part of today's conversation sparked an idea or helped you think differently about the industry, we'd love to continue the conversation. You can find each of us on LinkedIn, on X, on Instagram, or whatever your preferred social platform of choice is. Links to all of our profiles are in the show notes below. This Week in Hospitality is presented by Journey. Journey is a loyalty platform built specifically for independent boutique hotels and high-touch hospitality brands. Our mission is to give operators the same powerful rewards engine, data intelligence, and guest insights that major chains rely on, without asking them to give up the individuality, the soul, and the story that makes their property so exceptional. At a moment when travelers are craving unique, meaningful experiences, and operators are navigating rising OTA costs, fragmented data, and shifting expectations, Journey provides a unified ecosystem that strengthens guest relationships, increases direct bookings, and helps independent properties thrive on their own terms. We're building a global, curated alliance of exceptional hotels, villas, and residences, a network that rewards exploration, empowers individuality, and gives independents the scale that they deserve. If you're an owner or operator of an extraordinary independently owned and operated hotel or residence, and if you want to see whether your property is a fit for the Journey Alliance, you can learn more and apply at alliance.journey.com. All right, friends, we'll see you next Friday. Until then, keep building experiences that are worth remembering.